How's it going, everyone? It's Sam. I just saw one of my favorite analysts in crypto, someone that's not, I want to say not super well known. You might know him, but when I talk to people that are in Bitcoin, they usually haven't heard of him. That's Rational Root. He just did a presentation at Bitcoin Amsterdam talking about why, no matter what happens this cycle, whether we go up or down, why you probably want to hold on to some Bitcoin. He also goes through the 4-year cycles, explaining that we are in exactly the spot that we typically are in. And he gives a lot more information too. I'll be honest, I really like the end of his presentation. I'll play the whole presentation, but I'll put a timestamp on my favorite part so that way you can skip forward. It should be with about 7 minutes left in the video, just a heads up. But you can skip through if you don't want to listen to the whole thing. Before we get started though, if you want to trade cryptocurrency, there's a link underneath the video to Margex where you can set up your account in just a few seconds. There's no KYC, you don't need a VPN, and you can start trading because I think this is going to be a crazy bull run. And I want long positions ready so that way I can take advantage of some leverage. If you want to do the same thing, there's that link underneath the video. A couple other things real quick. Tesla is going to have their robot day or their AI day tomorrow. So be on the lookout for that. Apparently it's 7 p.m. Pacific time. Also, the ETFs yesterday, just real quick. IBIT swallowed up some Bitcoin. Fidelity sold some Bitcoin. Besides that, not too much going on. So just another day of the Bitcoin ETFs, BlackRock swallowing some up. But let's get over to the Rational Root.
Hello, Amsterdam. I'm so excited to be here today and to talk mainly about gaining conviction in Bitcoin. Bitcoin is very volatile, and so we're going to look at some of the fundamentals. We're going to look at cycle and on-chain analysis. And if you've been in Bitcoin for some time, you might have thought about contributing to Bitcoin. Well, let me tell you, the best contribution you can make to Bitcoin is just hodling. But hodling isn't easy. Hodling is actually very difficult because Bitcoin doesn't move in a straight line. You know, sometimes if we think of a model that projects into the future, we think like, okay, we can do that. You know, we'll just hold on. But then reality sets in and we get confronted with all the volatility of Bitcoin itself. And so today we're going to look at some of the fundamentals to gain conviction, and we're going to have an in-depth look at the adoption of Bitcoin by looking at its cycles and on-chain analysis. So I hope you're ready. But first, a bit about myself. Why am I standing here as a carrot in front of you today? That is because I value my privacy, and actually I urge you to do so too. My conviction in Bitcoin is actually what made me realize that privacy is so important, because if we think about the upside potential that Bitcoin has, maybe you're okay today, but are you still okay if Bitcoin does a 10 or 100x from here? And so I'm very happy and grateful that I made that decision 8 years ago. But it isn't always easy, especially at days like these where I have to show up like this. It's a bit uncomfortable. It's harder to network with people. But on any other day of the year, I'm actually very grateful because it adds to my personal safety. So I urge you to think about privacy as well. Now, as I said, I really believe Bitcoin is on the way to becoming the new world reserve currency. And with that, also to a Bitcoin standard, which is an enormous goal. It's actually about $900 trillion big. You know, there's about $900 trillion of wealth in the world that's looking for a store of value. And so you might wonder, like, where are we today? Now, we went all the way from zero to a value of above $1 trillion today. And that is actually really remarkable. Bitcoin really, if you think about it, couldn't have done any better. We're now at the stage where we have institutional interest, where we have nation state interest. You know, Bhutan is mining Bitcoin. El Salvador, Bitcoin is legal tender. The US is talking about a Bitcoin strategic reserve. And also the biggest wealth manager in the world is advocating for Bitcoin to be part of a portfolio. They compare it to digital gold. Well, let's look at Bitcoin and compare it to the analog counterpart. So here we look at a log scale, otherwise Bitcoin would just be a steep curve up. We still have some way to go, maybe about a 10 or 15x to really start competing with gold. But that might happen over the next 5 to 10 years. Now let's also show the halvings in here, which is when the inflation rates gets cut in half from Bitcoin. And we actually surpassed now the fourth halving, which made us go to an inflation rate of about 0.8%, which is lower now than that of gold. So Bitcoin is becoming more scarce than gold itself. We also see a bit of the cyclical behavior with these halvings. And so we see that it takes indeed about 2 more cycles to really start competing with gold. But that might happen in the next 5 to 10 years. Now let's also look at some fiat currencies, for example, the euro. With the euro, we see actually a very similar picture. So also 2 cycles, 5 to 10 years, we could seriously start competing, at least by this comparison of the M2 money supply of these fiat currencies. And the same is true for the dollar, which is the current world reserve currency. So we're actually already competing maybe in 5 to 10 years with the dollar. Now, let's look at a former world reserve currency, the British pound. That looks already possible to really start competing this cycle. And if we plot another country, here's the country of Mexico, then we see that we already surpassed it this cycle, and we might be above it for good now. So with that, Bitcoin is already in the top 15 of world currencies, and so we already surpassed 100 currencies or so, which is really remarkable. Now here, these lines look quite flat from the fiat currencies, but that's because we are looking at log scale. Now let's zoom in a bit on the euro. And if we look at the M2 money supply of the euro, so the amount of euros that are currently in circulation, we see exponential increase. So we have an exponential curve. And so actually we went over the past 15 years since Bitcoin's invention, we went from $8 trillion to about 16 trillion euros, I should say. And so that's a doubling. And so that also means our purchasing power got cut in half. And we all felt that a bit during the COVID era, where we see here that steep curve up even above the trend, and where inflation run hot, so they had to really pull the brakes, which they did for a year and a half. But now it seems we're back on the old path. And so we know that the euro will indefinitely go up by 5 to 6% per year. And if we compare this to Bitcoin, which let's plot Bitcoin in here as well, we see a whole different type of curve. Now, Bitcoin is on the right y-axis here. We went from 0 to about 20 million Bitcoin in circulation. But let's just compare the curves. So we have one that flattens out and the other one which increases exponentially. So also with Bitcoin, we can project into the future. So we already know the future supply issuance. So Bitcoin really is about digital scarcity, and its hard cap is so fundamentally different from the euro. It really makes for a different monetary policy. And so the reason I want to talk about this, because many of you might know this, but I find it very important, and I want to do just a practical example. So let's compare the euro and Bitcoin. And we take a bucket of 100%, and you may fill in, for example, your savings that you have in euros or dollars for the euro, and the same for Bitcoin. And we're just going to compare the monetary policy. So I know Bitcoin is volatile, so let's set that aside for a second. So if we plot the data over the past 5 years, we actually see that we lost about 20% of our purchasing power with the euro. And you can take basically any part in the history of the euro, and you will get more or less the same result, about 20% of purchasing power that you lose in 5 years. Now with Bitcoin, we also lost 8%. Well, many of you think Bitcoin, the hard cap of 21 million, but Bitcoin still has an inflation rate, but it's predictable. We can show the halvings in here as well. And so you can see how the curve is a bit steeper before the halving and it flattens out. So we also know that the 8% that we currently had over the last 5 years of devaluation, it will only be 4% over the next 5 and 2% the 5 years after that. And so this is very different from the euro. So in the euro, our purchasing power gets devalued a lot faster. But I have a hack for you. We can also take on debt, right? So let's do the same experiment, but now with taking on a loan. So perhaps you have a loan, so you can fill in again the same amount, or the amount of your loan that you have for the 100%. And we're going to do the same experiment. Well, obviously, it's the exact same result. Also, our debt gets devalued. And this is actually quite a good thing, right? Our debts get devalued by 20% per year, or 20% in 5 years. That's great. But there is obviously a catch. If we take on debt, we also need to pay interest. So also, let's account for that. We plot the interest rate here as well. And we take an interest of 3.5%. Also, of course, the interest needs to be accounted for the devaluation, which we do here as well. And then we still see that in the euro, we're better off. We're still below 100%. So it's still, even though we have to pay a significant amount of interest, we're still better off taking on that loan. Where in Bitcoin, taking on debt gets actually discouraged. So it's not that you cannot take on debt, you just need to have a really good reason. Now, why do I talk so much about this? It's really, what is the moral of the story? The moral of the story is that we are forced into the left system, and we really need to start thinking about what we are going to teach our kids. So I would argue Bitcoin is the moral choice. And this helps me personally with my conviction. So enough about fundamentals. Let's look at Bitcoin's volatility, because you might say, okay, Bitcoin is a better savings mechanism, but what about all the volatility? Well, first one has to realize that with any new technology, there is speculation. Technology implies speculation. We saw that with the internet adoption. For example, here you can see the chart of the NASDAQ during the dot-com bubble. We also saw a lot of volatility, so it's normal, but that doesn't make it easy, right? But volatility comes from a lot of human psychology. We're all human beings. We all make decisions based on our knowledge today, and so we're all susceptible to these emotional phases. And so you might have heard about the Wall Street cheat sheet. It's a famous chart in the financial world where they try to map out these psychological levels. And so really we go from disbelief to optimism to euphoria to panic and capitulation back to disbelief. So we go in circles in that with that human psychology. Now, let's try to map this to Bitcoin. Now, it's quite hard because we don't know when is Bitcoin overvalued or undervalued. And that's when on-chain data comes in. So if we think about on-chain data, we actually have access to all transactions in the history of Bitcoin. And so, for example, we can look at the age of coins. We can see if a coin is 2 blocks old, if there's a transaction of 2 blocks old or a transaction of 850,000 blocks old. That's a vast difference. And that tells us something about the activity of the supply. So if a lot of old coins come back to life, the supply becomes more active. Now we can also look at the purchase and sale price of a Bitcoin, which tells us something about capital flow. For example, if someone bought a coin for 50,000 and he sells it to me for 60,000, there's only a 10,000 increase in capital flow for that coin. And so we can measure the capital flow. So we can look at the supply side of things by looking at the active supply, and we can look at the demand side of things by looking at capital flow. And this allows us to actually create over and undervalued levels. So if you look at this chart here, we start at this blue dot, which is the Bitcoin halving, and then we move up and we get a lot of those green all-time highs, and we have a big green dot there, that's the cycle top. And then we move back into bear market and we get this big red dot, which is the bear market bottom. And so on-chain can help us identify these under and overvalued levels. Now, let's apply this to Bitcoin. And we're going to do this in a spiral chart. So we're going to map out the Bitcoin cycles. And so we take the spiral chart here, and we start in the top. And one full rotation in the spiral chart is a period of 4 years. And so with each cycle, Bitcoin actually tends to move to a new range. So we go from 100 to 1,000 to 10,000. And we're now in the transitioning towards that 100,000 range. Now, if you plot all of Bitcoin's history from all the way back from 2009, so let's just map out all this data in this chart. we actually can still not see anything because here Bitcoin still doesn't have a price. But now we can see the first dots appearing here in the center, and we move up quite fast here, all those green dots that appear, which is followed by this crash here. There we make a red dot, which is the bear market bottom. Then we get a blue dot there in the north, which is the first Bitcoin halving. And then we continue, we get a bull market. We get all kinds of green dots there. And then we continue back into a bear market, and we make a bottom there in the south of the chart, a big red dot. And we kind of move, we get a recovery phase, which is a lot of sideways price action. We're in 2016 now. We got the second halving, and we move back into more positive price momentum, and we get all these green dots appearing again. And so let's pause here for a second. We are now 9 years into Bitcoin, so 2 cycles plus the extra year, which is that green zone there on the end. And so if we would have to map the psychological levels, we could definitely say that we have 2 cycle peaks there in that area, which would be really the phase of euphoria. Now, if we know this part is euphoria, we can actually also start mapping the other phases for Bitcoin. So let's do that. Let's continue. So of course, with euphoria, we feel like a genius, right? We think like Bitcoin will continue to go up. But then, we quickly realize that Bitcoin doesn't. And then we panic and we capitulate. And then, of course, we feel a bit of depression. And then we have to go through a phase of enduring where actually conviction is made. And, we're in this disbelief and doubt phase for Bitcoin price. Doesn't do very much. But then there's, again, a halving, which gives a bit of hope. And so we get a bit more calm and we get a bit more optimistic. And so the price starts moving back up again, and we get a bit more of green colors coming back. So we're excited and we think like, yes, we're such a genius, right? We're, again, euphoria. This time Bitcoin will actually, we'll go to $1 million. But then, we fall back into complacency and panic, denial, panic, and we have to capitulate again. And of course, that brings again also some depression. And again, our conviction gets severely tested. We have to endure all this sideways price action. We get to these periods of stagnation and doubt. There's a lot of doubt. Like many rallies, they just go, but then they don't sustain. But then there's, again, a halving, and this time an ETF approval, and we get a bit more hope, and we get calm, and this is where we are today. So if we look at the past 3 cycles of Bitcoin, we have followed the exact same psychological pattern, which is really interesting. So now we're in Q4 of 2024. We're there in the top. And so the question is, will we continue to move up? Will we again go into a bull market over the next 3 to 6 months? So that's definitely something to watch. Or will the lines cross? Big question. Now, so here we see the year 2025, which is completely made of green colors, historically. So if history is any indicator, it will be an interesting year. Yet, there's always reason to have uncertainty and doubt. Maybe this time the recession will come. Maybe the recession will fall with the next bear market. We don't know. But let's add a new dimension to this chart. So we can actually look at this chart also in 3D. And now we can actually see the undervalued and overvalued levels even better. Look at that green zone, that green area that's right in front of us. Now maybe let's spin the cycle a bit, because we're there in the back, so we have a better look at that green zone. Maybe we can tilt the spiral up a bit, overvalued and undervalued levels quite well. And a few things stand out here. We can actually see that here we made an all-time high during a recovery phase, which is quite of an exception. That there was a good reason. It was the ETF approval. So there was early hype in the market. In the prior cycle, we actually saw the COVID crash. That was also a bit of an exception right there. Now look at how beautifully all these bottoms of the bear market cluster together there, which would be in about 2 years from here. And so what is interesting, if we highlight here that first quadrant, no single dot has fallen below the surface, which the surface area is actually the fair price of Bitcoin. Now, I want to leave you with two things here. So, because two things can happen. We can either go back into a bull market and continue also to get in overvalued price levels. That would mean that, you know, we're currently at a fair price, but even if we think about the next bottom of the bear market, that price is always significantly higher than the current fair price. So probably if that happens and you think about, you know, accumulating Bitcoin, you will never get to the same amount of Bitcoin if you miss out on this bull market. But what if no bull markets happens? What if we do get a recession next year and we just kind of go sideways around that surface area or devalue? Well, that would be just a shift in the 4-year cycle. So it's the thing to realize here is that the highly overvalued levels from the previous cycle are actually today's fair price. And so I hope this gave you insight into the volatile behavior of Bitcoin, but that's actually all very normal. And so I thank you for your attention, and hopefully you learned a bit, and I wish you a very good day. Thank you so much.